Good afternoon and welcome back to the Smarter Wealth channel. I am your host, Troy Lerche, bringing you this week in wealth. We're talking about the week ending October 29th, 2021, which was the final week of the quarter, and we are happy that October produced very nice gains in the market, and we saw a lot of clients getting a very nice rebound from the September month, which was somewhat, it was kind of an ugly month across the board. Without further, we'll jump right in. We've got our CAPE indicator was up even higher to 39.22 from the previous week's 38.7. We still have our 4 of 4 indicators are positive and remain in cyclical bull territory. Some of the summaries for the markets, we had the U.S. markets. Most of the major indices were up and hitting all-time highs. We had the let's see, with some of the big technology and internet-related companies reporting earnings is one of the main reasons. We had the NASDAQ up 2.7%. Large caps were up 1.3%, mid caps down just a tick, and small caps closed up 0.3%. So not too much movement there for the month, or for the week, I'm sorry. We had international markets mixed for the week. Commodities finished the week to the downside. Gold declined a little bit. Silver was down 2.1%, and oil finally reversed its trend, first one down in 10 weeks, but not by much, just a 0.2%. And then copper had the huge week a couple weeks ago, so it finished down 2.9%. Now for the October summary, we've got October was very strong for U.S. equities, as I mentioned before. The Dow actually gained 5.8%. The NASDAQ 7.3%, and so large caps 6.9%, mid caps 5.8%, small caps 4.2%. And international markets were mixed. We had Canada up 4.8%, United Kingdom 2.1%, France and Germany were up 4.8% and 2.8% respectively, whereas China and Japan actually finished down 0.6% and 1.9% respectively. Overall international developed markets, I think, were up 3.2%, and emerging markets added 1.1%. Commodities pushed higher. Oil surged 11.4%. Copper was up 6.8%, and gold and silver rose 1.5% and 8.6% respectively. So a lot of upside to October. As we saw in September, we had a lot to the downside. There's a lot of good economic data in our report, but I wanted to talk just a little bit about the rate of increase of home prices. Growth slowed in August. According to the Case-Shiller Home Price Index, showed home prices increased 19.8% from a year ago in August. And two notable cities that had huge growth was Phoenix and San Diego, remain the top 2 cities with largest annual gains, 33.3% and 26.2% respectively. We also had sales of new homes soared last month as the prices paid for them, which is something we're continuing to see. We had the median sales price of a new home reached $408,800, which is a record high for new home sales. So if you're looking to build a new home, or if you're looking to build a new home, it's going to take a long time because of supply chain issues. But if you are looking to buy a home that's, if there's any available new homes, you're looking to pay a very high premium for it. And I can tell you, we noticed that when we were looking for a new residence up here in the Fleming Island area. There was a very big, it's probably 30% premium for the new home we wanted versus what we bought. So we're very happy that we found the home that we love, and very happy to be here. Another note that some of the international economic news, I wanted to point out the German government cut its economic growth forecast this year to 2.6%, but lifted its estimate for next year to 4.1% as supply problems are delaying the recovery in Europe's largest economy. One piece that people have really seen is shares of Tesla surged 22% this last week, pushing the company's market cap to over $1.01 trillion. And if that, some people that just is a big number. Well, Tesla actually has a price to earnings ratio of over 330 in the industry. That is quite a bit higher than everybody else. So with its current market cap, Tesla's now worth as much as the next 10 most valuable global automakers combined, as from this chart from wolfstreet.com illustrates. And some people say, is this ridiculous or is it a precedent? And only time will tell. And you can see here from the graph, the red is Tesla, and you see that, you've got Toyota, Volkswagen, Daimler, GM, Ford, BMW, all Honda, all these major auto companies combined equal one Tesla. So that is something that's very, very telling, and we will see if they can keep it up. Well, I hope you guys have a great week. Take care, and we'll talk to you soon. Stay safe.